Greetings and thank you for joining me on the Vision Victory channel. I want to give you a raw response to a video that was made on YouTube about an article that was written last night on the road to Ruta. I actually myself picked it up on the sgtreport.com, but I am familiar with Road to Ruta and I highly recommend you check that site out as well. Before I give my response, please, if you have not already, go to the Victory Independence channel, share and favorite the new oil video, Breaking Point, comment on it, share it with your favorite blogs and websites, put a lot of work into it. And the main objective is, look, I believe realistically we are reaching the breaking point for how this economy can function on cheap liquid fuels. And I think the more people that are aware of this situation, the more people might actually take action, not only politically becoming activists, but people actually take an active role in preparing and protecting their family and maybe making some life decisions that will affect them in the future with higher energy costs, making those decisions now rather than later when we're in the crisis. Okay, so the article on the Road to Ruta is basically saying that Jeffrey Christensen of the CPM group is stating that is a cumulative production of over 50 million ounces of silver. Roughly half of that has been lost. And then, of course, the assumption is that there's roughly 25 billion ounces of silver left, which is true. But the person who made the video completely did not do their research or homework, because there is 1 billion. This is according to the CPM group, so same source. There is 1 billion ounces of above ground available silver. It's just over a billion ounces now. Now, there is 1 billion ounces of above ground coinage. So you've actually got just over 2 billion ounces of above ground available silver in coins and above ground available. Now, above ground available is basically the commercial industrial bullion. The reason I personally don't include the coinage in above ground available silver is because it's very unlikely somebody's going to melt an American Eagle. It's very unlikely someone's going to melt a dime when you actually can. That's actually illegal. So it's very unlikely people are going to start melting coins, especially like maples and eagles. It's just not going to happen, in my opinion. Now, when it comes to the other 23 billion ounces of silver that is potentially out there, yeah, of course it's potentially out there. It's not a secret. It's in my computer that I'm doing this video on. It's in the camera. It's in my cell phone. It's in our mirrors. It's in our cars. It's in our electronics. It's in your telephone pole. It's everywhere. But that silver is not available. So that is, yes, that is above ground silver that is there, but it is not above ground available silver. So then to comment on the actual article, it was making a case that silver is right around $360 an ounce based on the gold to silver ratio. My argument long term is that silver will be priced much closer to gold or possibly even spike over gold. I don't think it'll happen for very long, but it'll spike over the price of gold because the fact is that there's 1 billion ounces of above ground available silver. Let's include the coins. There's 2 billion ounces of above ground available silver. And there's 5 billion, roughly 5 billion ounces of above ground available gold. Gold, 95% of it is sitting in a vault somewhere. So there is absolutely less silver that is available for consumption when you look at it that way. Silver may be spread out in computers and telephone poles. Gold is being accumulated in central bank vaults. Now, the person who made the video also said that people, if they were going to rush into the silver and it was going to happen, that would have already happened by now. Now, he brings up a great point because the high unemployment, a lot of the arguments that people thought people would just move to the precious metals has not happened, and it may not happen. If the central bank stopped printing, it may never happen. But if the central banks keep printing, which is what they consistently always do, you will inevitably have a fiat currency crisis. And that is inevitable because it happens to all fiat currencies. And it looks like this one is nearing its end, the US dollar. I mean, it's about 40 years old now. It's over 40 years old. It's got let's see, 20 trillion in national debt will be the next presidential term. The entitlements, everybody knows the story. So there's going to be a huge reason to go into the precious metals and silver. Now, the silver supply is very tight. Now, one thing David Morgan talks about is, if people's 401ks aren't working, their pensions aren't working, there'll be a lot of reasons to go into these doom and gloom type investments. However, I don't think silver is dependent on that. I think gold is dependent on a currency crisis, but I don't think silver is because of the lack of available supply. We have dwindled through the above ground available supply. There was 10 billion ounces of above ground available supply in 1950. 2 billion, 3 billion in the 1990s. So we're definitely consuming that. Now there are more silver miners out there mining, but again, you have to factor in they're not mining it for $4 an ounce like they were back in the year 2000. A lot of these new silver producers that are coming online, it's $15 to $21 an ounce. So it's going to support a higher silver price for the future. But anyway, um, go to that video on the Victory Independence channel, watch it, share it, comment, and you guys have a great weekend. God bless.